And welcome. This is Mary Ellen McGonagle here with your Friday afternoon MEM Edge show, and the show where we bring you where the action is in the broader markets. And yet again, another choppy week, but we are going to go ahead and make sense of it all, and all with an eye toward helping prepare you not only for next week, we need to think beyond that, of course. So let's get started here. As usual, we are going to be taking a look at where the markets closed for the week. We're kind of in a pretty critical area, so I'll share with you support, resistance, and all of that for these broader market indices. And then from there, we're going to take a look at some of those top headline news that did drive price action this week. Also, what's due to be reported next week during our holiday shortened period. And then bottom line, what is currently driving price action in the market? So as we move through, take a look at where the strength was last week relative to weakness. You will get a really fine-tuned sense of where sentiment is and, in essence, what is driving the price action. So from here, news headlines last week. Earlier in the week, we did get that ever important consumer price index data. That's that CPI. And the data was mixed. It did show that the monthly CPI numbers were slowing. The annual CPI data was slowing. Unfortunately, the monthly data did show a bit of an increase. So in other words, bigger picture, we are in a phase where CPI numbers are slowing. However, with that monthly core data up a bit, inflation is still sticky, so still an issue. We did have many, actually 5 or 6 Federal Reserve presidents that spoke at various events throughout the week, and there was a uniform message primarily that they would advise keeping rates elevated up to that 5% level and for a longer period of time. And this really caused a bit of upset within the markets and caused shakiness, certainly relative to the prior week's more positive sentiment that was evasive or throughout the markets. We did get January retail sales numbers and they surged, and this was a big boost for retail stocks. I'll share with you that particular retail ETF, and we'll get into some of the names there. Also, weekless jobless claims, they did come in below estimates, and this is not what the Federal Reserve wants. They want to see those jobless claims increase, in essence, employment decrease. That is one of many ways we could potentially see inflation begin to dissipate more. And then also January, that producer price index data, it did come in higher than expected. This is another highly watched inflation metric, and that was another piece of data that did move the markets, unfortunately, to the downside. So from here, let's go ahead and take a look at that S&P 500 broader market index and see where we are poised to close. We're just going into the close as this is being recorded. So I will go ahead and refresh this chart. We're looking at a daily price chart of the S&P 500 and a couple of metrics relative to support and resistance. At this time, this 21-day simple moving average is resting here at 4087, and we are poised to close at 4079. The reason this is important is because ideally we would want to see support above that 21-day simple moving average. If we do close at this current level, we will have that 21-day as the nearest upside resistance. And granted, it is 10 points, but it is the next area, followed by this 10-day simple moving average as your next area of potential upside resistance. Now, ideally, the other metric here as it relates to levels on the S&P 500, that 4,100 is very closely watched as a metric of either support or resistance. Ideally, we did want to close back above that 4,100 level to give us a sense that the uptrend in the markets is still in place. So unless we can muster up 20 plus more points, but we are poised to close below that 4,100. We also do need to pay attention to the momentum metrics, and we can see that RSI. This is a relative strength indicator up here right above 50. It's resting here at 52. We do want to see that remain above that 50. So we are in good standing, certainly there. And then the faster moving stochastics, and they are dipping into negative territory. And again, they are faster moving. Oftentimes when using these metrics as it relates to momentum, you will want to go ahead and look at historical precedents. How does the market behave? And as stated, the stochastics are going to be a bit faster moving in the sense that it will be an earlier potential signal. So we're going to want to keep an eye on the stochastics. There have been other periods where it's dipped below into negative and been able to recover. So a continued move into negative territory would not be positive. From here, let's take a look at that tech-heavy Nasdaq index and see where we are poised to close here, a daily price chart, and we can see the momentum RSI up here in positive territory, as well as the stochastics. And certainly this growth and tech heavy index has been outperforming pretty much since the beginning of this year. So we can see that we are now poised to close above this 21-day simple moving average. Again, a move above that 10-day would be quite a bit more constructive, but again, outside momentum in positive territory. So we are in, we'll call it okay standing here with the Nasdaq Composite. Your next area of upside resistance, this 10-day simple moving average, and then downside support potential at that 21-day. So we're a little bit trapped in here. Makes quite a bit of sense, certainly given the mixed data that we are receiving. And then also Fed chair comments definitely driving market action. I'm sharing with you this weekly view to give you a sense that we could ideally, if we can get up above this 40-week, 200-day simple moving average on the weekly and move further to the upside, of course, that would be more beneficial for the longer term outlook for the Nasdaq. So from here, as always, we will go ahead and take a look behind the broader market indices and get a sense of what's taking shape as it relates to sector. We're looking at the 11 S&P 500 sectors. I've added an RSI, relative strength indicator. I'm going to go ahead and update this because we want to see where that relative outperformance is taking shape relative to weakness. So your stronger sectors are going to be up here in the forefront with your weaker sectors in this lower right quartile. And this type of view is not whippy. You're not going to see from week to week these advances from this bottom quartile up to the forefront. It will be more of a progressive type of move. So let's go ahead and take a look at this top performing sector up here. And I did mention to you that retail sales did provide a nice boost for consumer discretionary sector. So here we are with XLY. Another factor here for this particular group is going to be being aware of some of the heavier weight names, and Tesla is certainly a heavyweight in this group, and it was up over 3.5% for the week. So that helped as well. But we can see that consumer discretionary did pull back with other growth areas later in the week. But we did find support here at this 21-day simple moving average, outside momentum in positive territory. So overall, one of the more constructive looking sectors within the S&P. Industrial stocks up here at the forefront. This is one of the few, actually, there were more than a few, maybe 5 sectors that did post gains for the week, XLI being one of them. And we can see that it is up above each of these moving averages with its momentum indicators in positive territory. A lot of vibrancy here, certainly Deere coming out with strong earnings and other areas that I'll share with you as we move forward that are keeping this industrial area afloat. Up here, technology, it was in a first place stance last week. So we are seeing a little bit of a regression, if I may, and we can see XLK did find support at this 21-day simple moving average. So the view, not unlike the Nasdaq, is that it is finding support at that 21. The difference here with XLK relative to the Nasdaq is that it had been able to retain a very nice presence up above this 21-day simple moving average. Also of note with some of these sectors, and you will see this as we move through these areas, that the sector, in this case tech, did find buyers coming in on the dip today. So initially it had closed below that 21, but traded below that 21, but we are closing above it. Outside momentum in positive territory. From here, let's go ahead and take a look at some of the other larger sub-industry groupings within the S&P 500, and we can see that healthcare still continues to suffer. We had that nice rally into mid-December, and since then, the pullback and downtrend has been very real. Today, we did see the XLV up about 1%. We're seeing a bit of bottom fishing in some of the pharmaceutical names, and then earnings driven among some of the bigger biotechs, but by and large, healthcare remaining in that rather confirmed downtrend. Other areas that we can take a look at that did also trade higher today, consumer staples and utilities. And we can see they're not big heavyweights, but it is a move as we end the week into these more defensive and safer areas of the market, given the backdrop as it relates to recession fears coming back to the forefront. Again, all of this I will review further in my MEM Edge report, because we want to really have a good sense of underneath all of this, what is driving price action and what we can look forward to going forward. So that will come out on Sunday. You can use the link below to go ahead and trial that for a very nominal fee. So let's take a look beyond that. And these are sub-industry groupings within the broader markets that are really impactful. In other words, movement among, for instance, the yield on that 10-year treasury will have a very pronounced impact on other areas. So here we are with the 10-year treasury yield, and you can see we are poised to close the week at about 3.9. So we are inching higher. This is negative for growth stocks, but positive for other areas. So this is certainly well worth noting. Also, the US dollar, which had been in a deteriorating phase since last fall, is on the move to the upside. So, of course, a rising dollar can negatively impact commodities and other areas. So that certainly is of importance. Interestingly, KRE, this is the regional banking ETF, and we are seeing it had a nice big move here at the end of January, pulling back a lot of this earnings related. And we can see that the outside momentum indicators are positive. I will tell you, among these regional banking ETFs, it is primarily some of these larger names that are holding in well. From here, let's take a look at semiconductor stocks, a really relevant part of technology and the Nasdaq. And we can see that it too has traded back above that 21-day simple moving average, down about 0.5% for the week. So this is an area I'm keeping a very close eye on, primarily because when semiconductor stocks get moving, sharp advances can be made. So I'm going to share with you some of the brighter spots within semiconductors, but you will want to keep close eye on the broader group and make sure that it remains positive before putting new funds to work. IGV, this is the technology software ETF, and it did struggle for the week. It was down more than the broader markets. Let's see if it did close above that 21 and not quite, or just at that 21-day simple moving average. But keeping an eye on this because we've had a nice recovery since the beginning of the year. Pullback later in the week. Microsoft was down over 2%, but there are certainly other names in that industry group that are driving that price action to be a little bit in the underperforming category this week. One area on the move that had been in that far right quartile, but's beginning to advance to the forefront away from the weaker areas is volatility. And it's not particularly what we want to see. If we go back to these areas and periods when volatility, VIX, that volatility or fear index was on the rise, the broader markets were declining. So it is not a good backdrop. We've had these, I will call it head fake earlier in the month, very same dynamics that drove volatility higher as it related to Fed fears. That CPI print was positive for the broader markets and pulled that volatility back, but we are seeing it begin to creep higher. And then I did talk to you about that US dollar on the rise, and one area among commodities is gold, and we can see gold is continuing to trend lower, and one of the weaker subgroupings among the ETFs that I have. Now, one other area that I did not mention, but it bears a closer look when looking at the broader market sectors, and that is, well, I'll go ahead and share it with you here because it was the weakest for the group, and it is the weakest among those 11 sectors. That is energy. Energy stocks down 6.4%. We can see your momentum now in negative territory. Now, I will say a couple of the drivers here, several companies did report earnings that were not exactly stellar. This is Devon DBN, a real winner in prior years. I know from my work, I'm going to take us back. We did have DBN on my MEM Edge suggested holdings list throughout most of 2021. This was the top performing stock for that year. Of course, energy overall bounced around, but it was an outperformer in last year as well. Not Devon, but energy overall. But let's take a look. The stock on this weekly down 16% after reporting earnings. And there are other energy names as well, not suffering quite as much as this, but certainly be aware of the fact that energy has lost its luster. We can see the momentum is negative, and that's very high volume, certainly on today's 3.5% sell-off, indicating distribution. So did not want to leave without looking and taking a closer look at that. So that's a view of the broader markets, and then drilling down to strength relative to weakness. I did mention Fed comments were a big driver, but let's take a look at another area that continues since over the last 3 to 4 weeks. Your biggest movers on any given week have been those companies that have reported earnings, and this is continuing to be the case. So what I'm going to do is begin by sharing with you some of last week's biggest winners, and then we'll take a look at stocks that were big winners in earlier weeks so that we can see how you may handle that particular stock. Of course, always keeping that broader market backdrop in mind. So here we are with Cisco, CSCO, and I'll point out a couple of characteristics here. This is one of the heavier weightings in the Dow that helped keep the Dow afloat this week, because the Dow has a lot of energy names as well. So let's take a look at the response to earnings with that price movement to the upside. Did it, in fact, push Cisco out of a base on very big volume? So this is called a gap up into a base breakout, and it is historically one of the strongest and certainly most powerful base breakout formations. Now, of course, the broader markets were down today, but Cisco was able to be down only 0.5% and was able to retain this gap up. So what you're going to want to be on the lookout for is Cisco to be able to retain that gap up presence and not fill the gap. That nice high volume historically does point to further potential upside for Cisco. Let's take a look at a couple of other big winners, or certainly broader market indice movers because of their big advances. So HubSpot, this is a well-known software stock, and very similar dynamics with that gap up into a 2-week base breakout. Take a look at that volume, super high, certainly relative to historical precedent. And we can see that your momentum, your MACD black line up through the red, poised to trade higher with your RSI also up there in positive territory. So from here, I will go ahead and we can take a quick look at companies that came out with strong earnings earlier this year. And this particular name did not have a gap up per se, but this is Appfolio, APPF, and they did report their earnings in at the end of January here. And we did see a nice uptrend and advance out of there as the stock continues to trade higher. So a couple of metrics you will want to pay attention to while keeping an eye on, or if you own these stocks that come in with strong earnings and have explosive moves. First up, you will want to see that MACD signaling that a new uptrend is in fact in place. Make sure that RSI is in positive territory, and then pay attention to the price of that stock relative to these shorter term moving averages. Just last week, we did have a nice 3-month base breakout take place with this particular stock. I'll share with you another company that also had a super strong earnings report and then was pushed into a nice uptrend after a gap up. This is Elf Beauty, ELF, and it is a cosmetics firm. So we're going to take a look at precedents here because this was earlier this month. Here we are with that gap up. We can see that very high volume. A couple of characteristics to keep in mind here is the fact that we had this gap up and ELF closed the day in the very upper reaches of its trading range. That's a bullish candlestick formation. And from there, we can see that your momentum had already been in positive territory, but here we are with this gap up on super heavy volume. We were still quite early in this MACD black line up through the red reversal. So further upside from there, as opposed to a reversal taking shape up here. So from there, you will want to add, I'll do this in just 1 minute, but add a 5-day simple moving average, which can be really quite helpful in identifying entry points once a stock does begin to advance after releasing strong earnings, or really for any other positive reason. So here we are with that blue 5-day simple moving average. You can see just how helpful that can be. So from here, let's take a look at CDNS. This is Cadence Design, a software stock, had that gap up out of a nice 2-week base, but we are seeing the stock pull back and potentially close that gap. That is not what you want to see to signal further upside out of that gap up. Another example of a company that also experienced, now in this case, it's not a gap up, but a positive response to earnings. And then here more recently, this is DCO, a aerospace defense name, and the stock in response to earnings now has negative momentum. That RSI down here below 50, trending lower. And we can also see the stock has broken that 10 and 21-day simple moving average, super high volume here, and then that negative MACD crossover. So we'll see if it can find support here at that 50-day simple moving average. But quite simply, we can see that it is not responding positively to that earnings release. So another area that we can take a look at, given this past week's price performance, there were several names that did pull back in response to what was taking place in the market. So let's take a look at a couple of other companies here that reported earnings this week. And this is TXRH. This candle is not making it particularly easy to decipher, but I will tell you that it did report strong earnings. It pulled back to that 50-day, but it is now poised to close in the upper reaches of its trading range for the day, and that is good news. Let's take a look, because we did have more recently several semiconductor stocks report their earnings. This is Monolithic, NPWR. Here's that gap up into a continuation rally. And today's pullback, your momentum is still remaining constructive. So in essence, names for your watch list. If we can get more constructive on the broader markets, these are names that you're going to want to be aware of. LSCC. This is a name from my MEM Edge report that was added to our suggested holdings list back here. And today's pullback is keeping that stock poised to close above that 10-day simple moving average, which is quite constructive. A couple of other names that in that semiconductor space that, of course, this one is rather advanced, overbought. But certainly, if you think of it conceptually, a stock that pulls back only 1% despite having that significant move, it wouldn't be on the top of my list, but certainly one worth noting. So from here, let's take a look at some other areas. And I'm probably getting a little bit light on time, but I want to share with you some stocks that are have constructive looking charts going into earnings. And I'll tell you why. For those of you that trade options, this is a newer realm for me, but I did have 3 stocks that I ventured into purchasing calls ahead of their earnings, and they were each up over 100%. So here we are with PANW, and this is a name that I picked up really only for 2 days, but just paying attention to that stock's price movement going into earnings. The other name that I was able to capitalize on going into earnings was Uber. This is the actual release of their earnings and so on. So let's take a look at some of these names here that are picking up going into earnings. Here we are with Fluor, FLR, not as dynamic as certainly the other names I was mentioning, but really holding in remarkably well. They are due to report on Tuesday. PWR in the same space, poised to report next week as well. And then PANW does report on Tuesday. So I am going to leave it at that. One last area I would be remiss to not share with you that really outperformed this week is IWM, the Russell 2000 index. It was the top performer. The biggest driver among names there were companies that reported earnings. So again, big driver. This is Wire, Encore Wire. I have a host of other small cap names that did report and had really significant moves. The other big driver within small cap names was those stocks that are related to cryptocurrency. So we are seeing a big movement here, and there are a number of small cap names related to that are on the move. So I will leave it at that. Everyone, I hope you have a fantastic weekend. And again, use that link below so you can have access immediately to my MEM Edge report and receive it going forward twice weekly. Have a great long weekend, and I'll see you here next Friday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.